Welcome to TradeTheNBI.com. This is John. This report is for the 9th of August. And, well, we caught that weakness from the NBI White taking the lead. The beginning of a pushback up of the orange is what we talked about when these two met. And those became critical factors in the dip. But we also knew that short term buyers were going to be enough to hold the support. And they did. And so now when you have that orange caught between cyan and red, like we were talking about, you get continuation pattern, which at this particular stage is slightly down and across. So we're just going to be playing back and forth between um, these algo support levels that pre-exist. Wasn't quite enough to get the dip all the way to the full fill, but it was more than 80%, which to me satisfies it. Something that's always been a primary case of mine. So from that standpoint, shorts potentially are in trouble because you've got MBI magenta over yellow, which is going to make it hard for shorts to really drive things down. So probably going to see a pop up and potentially they'll be able to attack again there. But as you can see, we've got a full reset here from the DOC. So DOC red that completely reset along with green, and just new buyers haven't really jumped into it yet to activate things. The extreme histogram here in the green means the potential for a rebound exists and is strong. So it's not one of those where people who think they can just short and run away from it could be in for a bit of a surprise. But we'll continue to follow them as they go. Now you can see the short activity from a Nasdaq standpoint a bit stronger, and a clean fade off of short-term buyers, and still no buy configuration yet. But will it be enough for shorts to continue to drive lower? That's a full fill of we already had it of this positive extreme from the Nasdaq standpoint. So we've basically kind of been basing it would be the best description of it at a relatively decent level, well above the 61%, slightly weaker than the S&P in that we're below the 76, but nonetheless. Pretty solid support and just a normal fill back in of the breakout move that took place. So all in all, I think things pretty even. Flight into treasuries on back and forth weakness there, causing a little bit bump back up there with the expectation that there was a little bit more of a crude build, but that didn't change anything as far as where oil prices were going. And so the market just basically shrugged that off and expecting potential tighter supplies. And I think a lot of this has to do with some of that uncertainty in the Baltic as well as in the Gulf area and how quickly things can escalate. And with the bombing of ships in the Black Sea, there's going to be a massive increase in insurance rates and or whether or not they'll even be able to be insured. So that is going to create some supply disruptions, and those have ripple effects. Fine, it may be happening, way, to the east of where we are, but it still has a practical implication, particularly since the U.S. isn't ramping up production to the point where it can overtake any supply disruptions. So oil is putting in a warning sign for another round of inflation, something we were talking about as it started its breakout move. Worth keeping an eye on because that will put added pressure on a lot of things, and some people will be starting to sing the chorus that the Fed will have to ease again, and that could create a whole other roll around in the bond issues as far as treasuries go. And it's going to get interesting because that's where I was talking about the build of this tranquility is going to create a volatility. From a euro standpoint, basing here right at the 50%, still MBI white leading, so the potential for weakness or just this range bound trade exists at this particular stage. And we already know my feelings that the euro is still way overvalued relative to what it's producing, and it can't keep up with where the U.S. rates are. So why would you want your money in euros versus in dollars at this particular stage? You're still going to get a better return in a dollar. So I think that is going to continue to weigh on things. The gold depletion with oil rising where it is, I think this is going to create some excellent buy opportunities, getting gold at the bottom end of the range. So I think we can look for that as soon as we get the buy configuration from there. It's also caused Bitcoin and them to finally make a little bit of a jump here with that. And again, this is an interesting one because when you have that NBI white leading, you're expecting a breakdown, but when you still have magenta over that yellow, it's pretty tough for them to drive things lower. Not to mention, we already had the inverse of the DOC spread where you had green this time over cyan, creating a buy configuration within the Bitcoin setup. So, evening out of the shakeout, finally starting to get a steady rise, though potentially getting into positive extreme area, which may result in a little bit of a fill back within there. But nonetheless, first positive signs we've seen from crypto area in quite a while. So that will give some people an excitement. I think it'll be short lived, but we'll let it play out as it is. So you can see from an intraday standpoint, peaked out once we dipped below here with the NBI magenta below the 25, started to move lower. And as soon as we got the turnaround of NBI magenta back above, nice rally going from there. So that was pretty consistent from the breakdown of the shakeout. And we know that when you get NBI, DOC here below that 25 or 22 range, you get it automatic. In this case, we dipped all the way below the negative 23, and that usually creates a bounce back. Those don't usually run continuously without some kind of pullback into them, but in this particular case so far, it's moved all the way back up to the peaks. So it's just enough to create short cover. And when we look at it from an intraday standpoint, so going back to the previous day pre-market, as soon as we got towards the open and things had based down at the bottom, it was nothing but buy all the way through to the end of the session. And here we are in the pre-market, just floating and holding that gain and creating a new round of push as we get ready for U.S. pre-market. So that could be enough to either continue to push some shorts into covering and or create the buildup of a new short setup, because it looked like there was a lot of short covering once we had the dip down to the algo levels, and that's when things started to bounce right back up. So I think it's just that normal play, excellent volatility ranges, and pretty clean overall. I think that 50K showed it quite nicely. So all good from that standpoint. It's not going to be a clean run like everyone was expecting. Oh, once the market sells off, it's just going to keep going. It doesn't work that way. Not without some kind of impetus to do so. And in this particular case, you don't have that. We still have mixed data from an economic standpoint. So until that clarifies itself a little bit more, I think we're still going to see more of this back and forth and um, relatively healthy from a market standpoint. So no surprises from any of that. And we'll just keep following what the readings are, because they've been pretty clean and clear as to what is happening. So we'll just keep seeing if there are any new geopolitical situations that could throw a monkey wrench into it all, in which case then I think we would have a lot more extreme move. As always, though, trade well. We'll talk in later.